JP Morgan Chase, CEO Jamie Dimon and other financial executives will give you their predictions for the U.S. economy over the next few months, including rate cuts. I will also be providing you with a wealth of current information about the U.S. economy and things I am keeping an eye on in real time. Here is all of that data and material, but I also discuss this a lot in my live chats. You will have a clear knowledge of the state of the economy after watching this video, as well as our future direction. Come on. The economy is declining, in my opinion. I'm not sure whether that is a sign of a recession or simply a weakening, and that sort of validates what we already believed, and I am aware. It's a significant revision. Speaking of which, we're returning to the challenge of forecasting the current health of the economy. What's happening with the customer at the moment is one of the queries individuals have. They continue to spend money. Depending on their financial level, it varies slightly. They are still employed. Customers therefore often respond to that. Thus, the customers become weaker. Trade declines. I am aware that corporate private is still open. The economy is currently influenced by a wide range of issues. Determining the meaning of it all is difficult. I've always been rather doubtful of most forecasts for that reason, you know. We should thus wait, and there is a lot of stimulus available. We are unsure about what the federal government should do. They will most likely lower rates, but I don't believe it will be a result of the state of the economy. We shall see. Next week, they're going to cut? Indeed, they will cut. They should cut 50, in my opinion. They will most likely cut 25. Will vary. You know, the CPI data that comes out on Thursday or tomorrow will be intriguing. Listen, I believe they should reach 50, but I also believe they will reach 25 before we begin to decrease the rate. Nevertheless, this kind of income can still be obtained by constructing a portfolio. You can still remain in the front to the belly of the yield curve, by the way. Obtain that yield. Since your actual rates are now somewhat intriguing, we have been extending out a little. Acquire the fascinating items. Real rates at this time are actually acceptable if inflation is hovering around 3%. The curve is now out. Jamie Dimon, a former colleague and peer, claims that the economy is deteriorating. Do you think the economy is becoming worse? First of all, I believe it's complex, and that sound bites are really hard to decontextualize. And I divide it into two groups. The first is based on our own data. The second is what our own data shows more generally. It's remarkably stable. We see, for example, that consumer spending across nearly all wealth levels remains at the same annual rate, as you guys discussed this morning. In the past 6 months, consumer credit has been at its best. Actually, it's most likely trending slightly better. Businesses are doing incredibly well. We search for any indications of change, but you fail to notice it. That being said, there is a significant disparity between customers with higher and lower incomes that persists and is a genuine problem. And if you just look at the total number of jobs, it's clear that jobs are being created. Indeed, compared to what you could have imagined, things feel really fantastic now. However, it's not the same for all wealth levels. Additionally, there are most likely more drawbacks than advantages. You may see both high and low-end consumer spending. Okay, let's simply go on. I realized the clip was a little bit sluggish there, I'm sorry. X was experiencing some technical issues. I also wanted to quickly share you something here. One of the most significant economic issues of the day, in my opinion, is This is Scott Bassent, the U.S. Treasurer, sort of outlining his thoughts on the situation. Just to give you some more background and to show you where I'm taking this movie and what I'm going to show you, this was back a month or two ago. Next few years. Well, is it feasible for the two biggest economies in the world to rebalance together, or will they continue to separate? Senator? President Trump wants to reduce the trade imbalance and rebalance the U.S. economy toward increased manufacturing. The Chinese are still expanding their industrial capabilities. They currently hold 30% of the world's capacity, which is a significant increase since 2020. They enhanced capacity during the COVID-19 pandemic. They are currently seeing a significant decline in real estate. It might be referred to as a crisis. Their consumer spending is quite low. They must therefore correct their domestic imbalances and rebalance to increase consumer spending. But they cannot do so at the expense of workers around the globe. We may thus work together if they are prepared to be good partners and approach a discussion where the U.S. restores manufacturing, precision manufacturing, and high-paying employment, and the Chinese are prepared to open their economy to American goods. All right, so the goal of the trade war and tariffs is to restore manufacturing employment in the U.S., correct? Well-paying manufacturing positions. So let's examine the economy's general health and data. And I actually want to show you some things about manufacturing and what it means for the entire American labor market, as well as if it makes sense to do what we're doing today. Thus, this is a summary of the U.S. economy. Due to a number of causes, including higher tariffs, stricter monetary policy, and difficulties in international commerce, the economy has slowed significantly in 2025. After falling by 0.05 negative in the first quarter, real GDP increased by 3.3% annually in the second quarter. However, the overall growth for the first half of the year was only 1.4%, which is roughly half of the 2.8% observed in 2024. Forecasts predict that fiscal stimulus measures will result in sub-1% growth in the third quarter and a slight improvement in the fourth. The One Great Bill Act has started to have an active impact. Revenue from tariffs at the moment, with a record $31.4 billion collected in August alone, tariff collections in 2025 total $183.6 billion. The tariff is paid by whom? The tariffs are paid directly by U.S. companies and importers. I wish you luck. This video should not be interpreted as financial advice. The sole objective of this is amusement. I don't offer financial advice. If you need financial counsel, please get it. Now, let's return to the video.